What if I told you that in Forex trading, trusting someone else to trade your money is a bad idea? What if I told you that this is actually how I lost all my money? Yep. This is how I started Forex trading painfully. Now, if you're thinking about getting into Forex trading, pause. Let me tell you what I wish someone had told me before I started my Forex trading journey. No fluff. This is real stuff that I've learned that will save you time and money. Let's start with the biggest mistake of all and probably the most painful: letting someone trade for me. Trusting someone with my money. Now, when I first started, I trusted somebody, a seasoned pro, I'd call her, to trade for me. And at first she won. She was winning. And then she just started losing. And I was like, she knows what she's doing. It's gonna be okay. It's gonna be okay. Until it wasn't okay. I lost all my money, all of it. And there's nothing I could do about it. Why? Nobody forced me to trust somebody else with my money. Nobody forced me not to close the trades when I saw them, losing. Nobody forced me to let somebody else do the work for me. So if you're serious about Forex trading, don't hand your money to somebody else unless they are verified and they have a consistent track record. And even with a track record, still think twice. This isn't just a hustle. This is your money. You need to understand what is happening with it. And if you trust the wrong person with it, you're gonna lose it. And money doesn't come by easily. Why would you want to easily lose your money? Now, tying to that point was the fact that I did just trust somebody with my money, somebody to do the trading for me. I was trying to shortcut the entire learning process. I was like, I remember my friend telling me, you need to, take courses. You really need to understand how it works. Don't just go into it. And I was like, if I can just find a shortcut, what if somebody else just trades for me? Somebody I know, somebody who says they've been doing it, so I can not do the learning myself. I was in such a rush to make money, I overlooked the most important part of Forex trading, the learning. When she lost my money, when I lost everything, I realized I didn't even understand how that happened, what was going on, what led to that. So learn before you trade. Always learn. Even if you're doing copy trading, where somebody with a track record, a verified pro trader, is making the trades and just they're being copied into your account, invest time in learning so you can understand what is happening. Start with demo accounts. Trade with fake money that you get with your demo account. Watch what happens when you place trades. Try different features. Try different things. That is how you understand Forex trading. And then greed. This one cost me money I had actually made because I wanted more. You see, when you've placed a trade and it's going your way and you're making profits, oh my God, $100, oh my God, $200. And you're like, let's wait. Let it get to $500. And then when it gets to $300, it suddenly plummets and you've not only lost the $300 you made, you now lost your whole 500 or your whole 400 investment or half of your money. And you're like, oh my God, why was I so greedy? And that happened to me many times. I was like, okay, it's racking up. Let it rack up. Just $5 more, just $10 more, just $100 more. And before you know it, your profits are not only gone, the traders washed away your money. And somebody asked, Tess, when you lose in Forex, do you lose your money? Like, yes, you lose it. If you had $500 and you are in a $300 loss, the $300 is gone. You now have $200. So greed is something to watch out for. My advice: secure your profits as little as they are. $510 is better. That is, if you had $500 and you made a profit of $10, that's better than if you trade your $500 and you lose $300 or even $20. You don't want to lose. You want to rack up profits and not at once. So don't be greedy. Remember, a bird in hand is worth more than two in the bush. That applies to money too. I learned the hard way. Please take my advice seriously. By the way, choosing the best Forex broker is one of the most important decisions you can ever make in your Forex trading journey. And my Forex broker of choice, as some of you already know, is Pepperstone, the sponsor of this video. Thank you, Pepperstone. When I first started trading, even with all the mistakes that I made, choosing Pepperstone was one of the things that I actually did right. And somebody I trusted recommended them, and it was the best recommendation. They didn't just give me access to a trading platform. They gave me an account manager who called me as soon as I created my account and walked me through everything. I literally had no time to get lost wondering, oh my God, how does this website work? Pepperstone also offers fast trade executions. No weird glitches, no delays. Your trades are executed instantly, which is very important. And it works with trading platforms like MetaTrader 4, MetaTrader 5, CTrader. They even have their own trading platform. So you get a variety of trading softwares to choose from and work with what you prefer. And when it comes to money, Pepperstone offers some of the lowest spreads I've seen. If you know how spreads eat into your profits, then you know why this matters. With Pepperstone, you kind of get to keep more of what you make. And honestly, that is the point, right? They also don't force you to start with a specific amount. You can start with an amount as low as you want. But honestly, if you're serious about trading, then you want to start with enough money that will allow your trades to breathe. Copy trading, especially, I learned, needs enough capital to sustain the trades the pro trader is making. So $20, for instance, for copy trading won't cut it. Start with something like $300 so that it can sustain the fluctuations of the market. So for those who keep asking me, Tess, what is the best amount to start with? I'd say start with enough money so that your trades can breathe. If you're making trades for yourself, you can start as low as you want. If you're doing copy trading, start with $300. Now, this isn't just some random broker trading in the shadows. Pepperstone is regulated by top-tier bodies like the FCA in the UK, ASIC in Australia, Capital Markets Authority of Kenya, and more. So you're not just trading on vibes, you're actually trading on a platform that plays by the rules, and that is important. In the Forex trading world, you need a regulated broker. And yes, it's available in most parts of the world, including Africa. So if you're ready to start trading, Pepperstone is a great place to start. You can create a Pepperstone account using the link in the video description. You'll also find a link to download a free beginner's guide that has all the info you need to start Forex trading on Pepperstone. And then I let losing trades run too long. That's a horrible mistake. This day I made a trade and I had done my analysis and I was like, yep, everything is set. And then I placed a trade and I said, I'm going to let this trade run. And, when I started, I was very gullible and a bit, stupid, because I remember I had traded on gold. I didn't even know how volatile that was. I was just honestly trading on vibes. So I make this trade and I say, I'm going to let this run for 2 days so I can make as much money as possible, because I needed money, urgently. So I make the trade and it's going my way for a while. And then suddenly, I think something happened. Either some news or something happened and the market just overturned and now I was losing. I had lost like $100 and I was like, it will go back. So I let it run. I said, somebody told me, trading, you have to be patient, but you have to weigh these things. Anyway, I said, let me be patient. And I lost. And you see, when you're losing, especially with gold, you lose. And I lost. I regret not securing my profits and closing the trade, because when I made the trade, I was making profits. I had made a significant amount, but I was like, I need to let this run for 2 days. And then even 5 hours didn't finish. It just overturned. And instead of closing the trade after losing $50, I let myself lose 50 more and 100 more. And my account was cleaned. $0 left. So I kept thinking maybe it will bounce back. It will bounce back. It never bounced back. And that day I learned a very important lesson. Cut your losses and cut them quickly as soon as you can. I learned that your number one job in Forex trading is to protect your money, to not lose your money. Yes, we want to make profits, but if your ifs are gonna make you lose money, cut your losses. It's better to make no profit today than to lose even $1. So if you have to choose between making $100 or losing $10, I don't know. For me, I'd say I'm gonna bet on my money stays in my account. The next mistake was I traded on emotion instead of strategy. I'd place trades because I felt like this currency pair is gonna buy. I'd sell a currency pair just because I felt like it's gonna sell. I was making trades based on feelings, how I felt. And I thought I had instincts. They tell you, when trading, listen to your instincts. But when you're just getting started, you don't have instincts. You have impatience, you have emotions. When I was bored or angry or very broke, I was like, oh my God, I really need to make money today. My life is not going where it's supposed to go. And then I make a trade. Sometimes when I make a trade, I am so afraid, very afraid. It's okay to cut your losses, but don't follow your fear or your greed or whatever. Because I'd make a trade and I forget that the market fluctuates. So I get afraid that I'm going to lose my money, especially when you get PTSD from losing your money a bit too many times. I just close a trade too early, closing the trade based on emotion, not on strategy, not on logic. So learn this. Forex doesn't care how you feel. It doesn't run on emotions. It runs on data. So you need a strategy, a trading strategy, a system. You don't need feelings. You don't need moods. You just need, this is my trading strategy. I make trades when this happens at this point. This is what I trade on, and this is why, and this is why I take this strategy based on logic and data. A mistake I recently made was underfunding my copy trading account. When I first started copy trading, I was trying to understand how it works, So I was like, I'm gonna invest as little as possible. I am very stingy with my money. I tell people that every day. So I put $100 and it was gone. And I started asking my account manager, why is my money just gone like that? Until he told me to take time to understand. And then I realized that when it comes to copy trading, the pro traders you're copying, they have like huge investments. Like somebody's trading with like $30,000. So if you put $100, even if you put like the lowest lot size, you're not able to sustain the fluctuations of the market. Your money ends quickly, finishes quickly, and you get locked out of the market. But if you have enough money, like don't put 30,000 like that. Obviously you can't. That's why you trade small lot sizes. But just put enough money for those trades to breathe. So that is one mistake I made, and I saw I'm not making again. And then another one was when the trades get copied on my account, I'll just let them run. I would say these trades were made by an expert. I wouldn't take into account my account, the size of it. So when, let's say, there were so many, trades going against what obviously the trader expects, I'd just let them run instead of closing those trades, because as much as the guy who's placed those trades is letting them run, he has the money to support that. I don't. So closing the trades, some trades, when things are not going the way they're supposed to go, will help you save money and keep you in the market for long. But if you just let them run, your money finishes quickly, you get kicked out of the market, and now you've lost everything. So if you're using copy trading, you need enough money to match the strategy. And if the trade goes wrong and you can't afford to keep it open, close it immediately. And this is the biggest mistake I made, actually, in addition to the ones I've mentioned, thinking Forex was a scam. You see, there was so much bad PR around Forex, and for a long, because I started hearing of Forex, I think in 2019 or even before I even started creating content on YouTube. And I just said, I'm never coming close to that. It's a scam. Until I learned that it's actually not a scam. It's just a very high risk investment. And the people who claim it's a scam are the people who go there with greed, without actually learning, without taking with ignorance, and then they lose their money and then claim it's a scam. Or they fall for scammers who say, I will trade for you, give me your money. Or they use the wrong brokers who are not regulated. So they make the wrong decisions and lose, because if you make the wrong decisions, trust the wrong people, use the wrong platforms, or don't take the time to learn, you're gonna lose like I did. I made my mistakes and I lost. Does that mean Forex trading is a scam? No, it means I did not do the right thing. So you need to know that Forex trading is a high risk investment. It's not a miracle make money hack. It's not a get rich quick scheme. People lose money when they skip learning, when they chase fast cash, and when they act without a plan. But when you understand how it works, you realize that Forex is a skill, not a scam. And if you respect the risk, it can reward you. Now, if you want to get started with Forex trading but have no idea where to start, what to do, what platform, don't worry. I created a step-by-step tutorial for beginners where I am just sharing my story, telling you what Forex is, how to choose a broker, how to place a trade, how to start copy trading, how to deposit money, how to withdraw, everything you need to know to get started. And you learn all this in just 30 minutes. This tutorial equips you with the basic knowledge you need to get started. It gets your foot in the door and you can watch it now